Hey, what's up, everyone? So thank you so much for all your comments. In this video, I want to talk about why I sell puts at different expirations. Some, 1 year out, some a couple months out. And first of all, I just want to thank you so much for all the comments and ideas that you guys have. I know with options, there's so many different perspectives, so many different angles. You can go with different stocks, and so I totally respect every one of your ideas. I think they're great. In fact, I'm really intrigued by a lot of the ideas you guys shared. So thank you once again for sharing your comments. So in this video, I just want to show you kind of how I see some of the angles that I see with selling puts. And I know, again, there's just so many different ways you can sell puts, but just showing you some of my analysis on why I chose different strikes and different expirations for different stocks. Okay, so before I begin, I do want to mention one important factor whenever I sell puts is I do it on my Interactive Brokers account, and Interactive Brokers is not sponsoring this video by any means. I'm simply telling you this because it's really important because I do a lot of trading with margin, and basically margin just allows you to borrow off of your positions. You can borrow even more money. So especially when you're selling puts and you need collateral. Okay, so you can borrow in case you get assigned, right? You can borrow up to, I think, 50% of your portfolio at a really, really low rate, right? Like if you have below $100,000, the interest rate is 1.58%. With the IBKR Pro, if you have more than $100,000, then it's 1.08%. Okay, that is insanely low. You won't find that rate lower. Uh, you won't find that rate at any other brokerage that's lower than that. And so that's really a really important factor for me because I know that when I was selling puts on Robinhood, on some of the other brokerages, I just wasn't really able to do that because a lot of my money would be tied into capital or collateral, and so that's the reason why I have to mention this before I even begin. Okay, so without further ado, I want to take a look at some of the stocks that I have actually sold puts on and just kind of take a quick look at some of the different expirations. So the first stock ticker is just NEO. Okay, so NEO has been a stock that I've been selling puts on. And so my initial thought whenever I was selling puts was, I would try weekly. Okay, so and one thing I think is important to note is that every stock is different. It depends on the volatility, mostly that, but there's a couple other factors as well. And so the expiration date and the amount of premium you would get definitely differs from every stock. Now, the way you can find out the implied volatility is right here. If you're using Robinhood, it'll tell you the implied volatility. And yeah, so generally speaking, if the volatility is higher, so your premium will be higher as well. Okay, so taking a look at the Neo puts, so I would probably open up the put at let's say $25. So if it goes, I'm generally pretty conservative, pretty safe. So Neo does have to drop quite a bit before I would add more exposure. And the reason for this, again, it differs from everyone, but I already have Neo exposure. So I have shares, I've sold put options. And so I'm not really trying to get assigned. So in this case, I will sell the strike at $25. So I would collect a premium of $19 in a week. If you're trying to get assigned, of course, you would go a little higher. But yeah, so looking at the $25 mark, if it's a week, it's about $19. If it's 2 weeks, we would look at about $35 for premium. If it's 3 weeks, we're looking at about $50. And if it's 4 weeks, we're looking at about $67. Okay, so it's going up about $15 every week. And let's take a look at February. So February, same thing, going up about $15. Let's take a look out into March. Okay, so in March, we would start getting about $165. That's about 3 months. And let's take a look at May. Okay, so $243. Okay, so and take a look at all the way in September. And I do have a nice nifty chart on some of the other stocks that I'm selling puts on, so that way you don't have to keep tabs. as I'm going through this video. But on September 16th, if I sold a put, I'll collect about $300. And on January 20th, I would be collecting about around $360 in premium. Okay, so as you go further out, you do collect less premium on this. And one thing I also want to just note is that of course it's going to change, right, depending on the stock and how it moves. If it goes up or down, the premium is going to change. But I'm just kind of looking at different options right now of what I can sell today. Okay, so that's just some of the options for Neo. And yes, like what I would definitely say is, if you do sell monthly or, quarterly, I think the premiums are generally, more favorable than I think selling year out. I think, it just differs for every stock. But in this case, like I think we saw some pretty good premiums in May and, even in August, September compared to January. So that's something that I would definitely compare before I sell puts that long out. And I do want to show you a chart real quick on some of the other stocks I'm selling puts on. So let me just open that up real quick. Okay, so let me give you a real clean chart. I've kind of laid out all the different expiration dates and different strike prices that I would sell. It would really just be one strike price I'm selling the put on, and then the amount of premium I would collect, and then the amount of collateral it would require for me to collect that amount of premium. Okay, so I did it for Tesla and HBQ. Okay, so as you can see, right, the premium you collect, the difference between the premium you collect weekly and monthly does vary. Okay, so, and what I would say is, for Tesla especially, I think for me the thought was just, if I can sell a put at $800 and collect, 8,000 in September versus collecting 12,000 in January, right? I'm more happy to just go ahead and collect, more premium upfront, and then being happy with getting assigned at that strike price and also collecting that premium, right? Then rather than collecting like a weekly or even monthly collateral. Okay, if that sort of makes sense. And the reason why is because number one, it does take more work for me to sell weekly or to sell monthly. Number two, even though the premium does increase month to month, for me the amount of time and the variance of how it may move, to me, like it's basically just like for me it's okay. I'll be perfectly happy with collecting $12,000 on Tesla and selling an $800 put. Okay, so really it just depends on the stock and what you will be happy with. Like for HBQ, right? I know that by August, if I sold the put at the same strike price at $35, I can collect $252. Now, can I collect more in between? Probably, right? I would probably make a little more selling puts, in between month to month. But for me, I'm perfectly happy with collecting $385 on HBQ and getting the stock assigned, if it ever reaches $35 and if the option holder is willing to sell it to me at $35. Okay, so, and then again, going back to the interactive brokers, that is another, again, that's a huge factor for me because the amount of collateral that's tied up, to me, is fine because I have a lot of purchasing power. Given that I'm using margin. Okay, so if I ever get signed, then I still have, cash. I'm not, I'm technically not trading on margin yet, but because I have this account, if I ever get signed, then, that money would be bought, that money would be, the stock would be bought on using margin. Okay, so that collateral to me doesn't really affect the amount or whatever else I can open up at this point. I know this all sounds really complex. I honestly I don't really know how to simplify it a little more. Maybe I'm not there yet, so I do want to apologize if this is really complicated. But let me know in the comments below what you think. Okay, so I'm always open. Again, this is a journey that I'm willing to share and be very open with you guys. I want to say that I'm not, an expert by any means. I'm simply a trader that is going through this journey along with you guys. Okay, so those are just some of the stocks I'm selling puts on, that I have sold puts on, or I'm considering selling puts on. Some of the analysis I've done, some of the comparison, and some of my thought behind selling puts at different expirations. Okay. Now, one last thing I want to note is that I do open up, I do sell puts, quarterly and, every monthly even as well. So it's not like I sell puts just only a year out. And I just want to make that clear as well. Okay, well, if you like this kind of content, if you want me to make more content like this, make sure you smash that like button for the YouTube algorithm. Comment below if you have any questions. As you can see, I made an entire video just because of your awesome comments that I really, really appreciate. And subscribe if you haven't already. Until next time, guys, thanks again for all your love and all your feedback. And I will see you guys in the next video.